And I guess you are starting to use QuickBooks Online or thinking about setting yourself up in QuickBooks Online. Now, this video will walk you through the entire account creation, setup of the new account. I'll explain some of the different options. We'll talk about doing the initial configuration and preferences based on your industry. And then we'll do a couple of exercises on transactions, like downloading transactions from the bank, creating invoices, reconciling the bank, and pulling financial statements. If you already have a QuickBooks Online account set up, you can fast forward to the minute and seconds below to skip the entire new account setup process. However, if you're starting from scratch, from zero, I recommend you watch the entire video so I can walk you through setting up the account and also choosing the right version of QuickBooks Online that's for you. All right, the first thing I recommend is you need to use Google Chrome as your browser. Don't use Firefox, don't use Safari, don't use Internet Explorer. QuickBooks Online was actually designed to work best and optimized in Google Chrome, and through this video I'll explain some of the specific Google Chrome features that work best for QuickBooks Online. The first thing I'm going to recommend is you're going to click on the top right of your Google Chrome browser, and that may say person one, or it may say your name in it, or it may say something else, but you want to click on that button and then click on where it says manage people. Basically what we're going to do is we're going to create a user exclusively for QuickBooks Online, so all the preferences, bookmarks, passwords, everything we do is only on that user. So we're going to click on add person on the bottom right. Then we're going to call this one QBO user. You can call it whatever you want. I'm calling it QBO user, and I'll use this white head over here and click on save. Okay, so perfect. I got my Google Chrome user called QBO user, which is designed just for QuickBooks Online. And I recommend that you do your browsing in another Chrome user and use QuickBooks Online on this one. This will also keep your QuickBooks Online safest on the logins and fastest, because QuickBooks Online tends to do a couple of security checks, and if you do a lot of logins and logouts of other websites, QuickBooks Online tends to be a little bit slower to log in. So if you have a dedicated Chrome user for that, you will notice, you will thank me later, it is the best possible thing. But the first thing I'm going to recommend is, if you don't have an account yet, is to create an account using my link. So my link is hectorgarcia.com/QB. And once you go to hectorgarcia.com/QB, it will forward you to QuickBooks' purchase page. Now, my link will give you a 30-day free trial, and it will also give you a 50% discount if you sign up for the first year. It's the only link that I know that can do that. So I would definitely recommend that if you're going to get QuickBooks Online anyway. Now, once you get to this page, it will ask you for three choices. Do you want to go with QuickBooks Online Simple Start, which is basically just for invoicing and banking, and to have one user working on QuickBooks simultaneously? Then you have QuickBooks Essentials, which is this middle option that allows you to have 3 users working simultaneously plus 2 accountants. And this will allow you to track invoices, bills, and recurrent transactions, which is a really valuable piece of managing your books. And lastly, if you want to track inventory, budgets, job costing, class location tracking, and issue 1099s to contractors, all those features are going to be inside of the Plus edition, which also allows you to have 5 users working simultaneously. So let's go ahead and choose the edition that we're going to go with. Most people go with Essentials, and we'll click on Start Free Trial. Then it's going to ask you to enter an email, phone number, and password, and then click on Sign Up with Email, and then it will create the account and get you started with the setup. Next question is, what is the name of your business? So I'm going to call this Hector's Computer Shop. Okay, and you put LLC, Corp, whatever it happens to be. Then it's going to ask you, how long have you been in business? And this is only really contextual for QuickBooks to then guide you on whether or not you should be bringing old opening balances, because your business has been open for more than a year, and making the assumption that you do have a tax return or some sort of financial statements for the previous year, and you're setting up QuickBooks, and you may want to bring that old data in there somehow. So by putting the number of years, QuickBooks may guide you to that process. I'm going to put here that we've been in business for 3 years, and then there's a little check mark that says I've been using QuickBooks Desktop. Should QuickBooks Online walk me through that process? So if you do have QuickBooks Desktop and you wanted to walk you through the process of getting the data from QuickBooks Desktop, into QuickBooks Online, you will hit that check mark. For this particular video, we're going to skip that piece. Take a look at my channel for other videos about desktop to online conversion. We're going to start brand new from scratch in QuickBooks Online. So we're going to go ahead and click on next. And then it's asking you what would you like to do in QuickBooks. And really, this is only for QuickBooks to then send you some help or some pop-ups of videos and articles on how to do any of these things, like creating invoices. I like to skip them just because I know how to use QuickBooks really well. And if you're watching this video, you don't need QuickBooks to keep walking you through the process. In this video, we will cover all these things. So we're going to click on All Set. And the first thing you will notice up here where it says you have a 30-day trial. You can click on Subscribe Now once you're ready to put your credit card and move forward with the account. But you got a whole 30 days. You don't even have to touch that piece where you can use QuickBooks Online. Now, when you first set up QuickBooks Online, there's absolutely nothing in there. There's no customers, no vendors, no accounts, nothing. So in order to do that, we're going to have to go and create that database of customers, vendors, accounts, items, and products. But the first thing we're going to do is we're going to go through the preferences. I think it's very important to go through the account settings and preferences to kind of get an idea for what the capabilities of QuickBooks are. So we're going to click on the gear button, which is the little gear icon on the top right, and then we're going to click on where it says account and settings. So I am recommending that that's the first place you go. And then under account and settings, we can change the legal name of the company. We can put the tax ID. We can click on this little pencil icon on the right to edit, and we can say, okay, our LLC, it's a partnership, and we can put here our industry. So let's say we are in the computer industry, so we can put computer, and then we're going to get all these different options. So I'm going to put here computer system designs and related. So I'll click on that, and then I'll click on save. And this also allows QuickBooks to kind of know in which direction to go with the setup, and you'll see as we go. And you can add more things like your website, your phone number, your company address. All that stuff is really relevant. Logo for invoicing. We'll get back to that. Now under billing and subscription, that's really when we can cancel our free trial. We can upgrade to the plus version if we wanted a little bit more features, and we can click on subscribe to enable payroll. And we'll talk more about payroll a little bit later on. For now, this is just where you see your account settings and your company ID over here, which is extremely important and valuable. If you call QuickBooks Online tech support, the fastest way for them to know what company they're talking about is that company ID. So when tech support calls you, when you call them and say, hey, I need help with this, I'm having issues with this, give them that company ID and they'll go straight to your account. Now let's click on sales. Let's see what's in sales. And the first couple of things I recommend is customizing your invoice, because that's pretty much the number one reason why people get QuickBooks Online is to create a new invoice. So we're going to click on customize look and feel. And from here, we're going to click on either edit the current style, which is basically the template, or we can create new ones. Let's just click on the one that's default, and then we can do a couple of things. We can add a unique logo. So I can click on add logo, and I'm going to go ahead and look for my company logo here. And there it is. I click on open, and that will bring the logo in there. What's really cool about it is once you bring the logo in there, QuickBooks assumes that the color scheme from your logo is the same color scheme for your invoices, and I'll detect the colors on that logo and bring that in. You can also click on splash some color, and you can change the color scheme if you want to. You can click on the fonts, and you can change the font size or the font style if you want to, if you want bigger or smaller font, that type of thing. Let's not get too deep into the invoice configuration. I think adding a logo and the colors is pretty much the best way to get started. So we're going to click on done, and that will be done with that. So that's great. I mean, believe it or not, we're very, very far ahead on our setup. Let's go back on account and settings, and let's go through the other settings. So I'm going to click on sales, and let's take a look at what we have here. So we have preferred invoice terms. So basically they're asking you, when you create an invoice, how many days do you want to give your customer until they pay you before they're officially late, before you charge them a late fee. Now, you may not give any client credit. You may want them to pay you immediately. Then in that case, you click on due on receipt, and every single invoice, that will be the default option. Or you can leave it at net 30, which is what's there already. Now, preferred delivery method is whether or not when you create a new invoice, if you want QuickBooks to queue up a print list for me to print the invoices and mail them all in batch, or if I want to queue up the email list, because what I want to really do is email my client the invoice, which in the year 2018, strongly recommend that you do that. Now you can turn on shipping, which basically adds a little box for shipping, so you can add some shipping options. You can add some custom fields if you want to record additional information about the sale with your customers. You can click on custom transaction numbers. That's actually crucial. Custom transaction numbers means that instead of QuickBooks controlling the invoice numbers, you can override and put whatever number you want for the invoice number. Typically, I like to click on custom first. I pick a big number or whatever number I want, 10,001, and then turn it off and then let QuickBooks follow its own numerical process. You can add service date. For example, if you want to record in your QuickBooks when you did the work, separate than when you're invoicing, and other things like discount on deposit, we'll skip them for now. So we'll click on save here. Then we got under products and services, it says, would you like to show a column for the products and services that you want to show the actual item that you're selling your customer? This could be a product or a service. I absolutely like that. I work with items all the time. I will explain what that is, and that's open by default. And also quantity and price and rate, that's also enabled. And again, if you don't work with quantities and price and you just work with totals, then you would just unclick that. But I typically work with rate and quantity, so I'm gonna enable that. And those are pretty much the default settings. I'll click on save. Everything else in there you can explore, but it's not really that important. I'm gonna click on expenses, and the only option you really have here is the default payment terms. This is how many days do your vendors give you to pay them, similar than the invoicing. I'm gonna leave it a net 30. However, you can change them in a vendor to vendor scenario. And then from here, you can turn on purchase orders, but you would have to upgrade to that plus version of QuickBooks Online. We're gonna stay on the essentials version, and we'll do the walkthrough on that. And then once we're finished with that, then we're gonna go and upgrade to plus, and then talk about the things that are in plus. Now under payments, that's for you to enable the special service that QuickBooks has to give you the capacity to receive payments online, to receive credit card payments online. So if you want that, you would have to go through this process, click on learn more. You have to put as the owner, you have to put the social security number, your social security number, you have to put the EIN, the tax ID from the business, and you have to get approved. Now, most people get approved unless they have some real big issues with their credit, they get approved. And within a couple of days, you can start charging your customers with a credit card, which is awesome. And you get paid within a couple of days, which is great. And then under advanced, we got a couple of really interesting things, again, crucial to the setup process. Are you a January through December type of company, or do you have a different fiscal year? Some companies are July through June. They don't follow the calendar year scenario. I'm gonna do January as the example, but if this is a place where you want to change that, this would be the place to change it. Now, accounting method, it tells you accrual or cash. What's really cool about QuickBooks is it lets you swap back and forth, so you're not really stuck with one method. And this really has to do with the way you file your taxes. Most small businesses do cash, or they file taxes on cash basis. However, because QuickBooks allows you to swap back and forth, I actually wouldn't select cash even if my tax return is on cash. I will follow the accrual method. And that's because you want to manage your books in accrual, and because you want to know what's going on in terms of who owes you money and who you owe money to, regardless of how you file your taxes. You can always switch it for the reporting purposes, but you want by default manage it in accrual basis. And here's a place where you can close your books, which is really just relevant to when you have your year closed, your tax return filed, and you want to block those books so anything from the year past, people can't really change it, including yourself. Protect yourself from having your QuickBooks be different than your tax return. Then we're going to go to tax form, and we already kind of changed that. We told it what tax form it is, and obviously talk to your accountant if you don't know what tax form your business uses. And if you don't have an accountant, you got my email. You can call me I'm taking new clients all the time, especially if you use QuickBooks Online. I like working with clients that use QuickBooks Online. But your accountant or the person that helped you set up the company in the first place should know what form your business should follow for taxes. Okay, let's see what we got here. Chart of accounts. Enable account numbers. You don't have to use account numbers, but I certainly like using them. That's to give your chart of accounts numbers as well as names. So we're going to turn that on here. I like using that, but you don't have to, and you'll see what that looks like when I set that up. Let me click on save. Let's take a look at automation. So we have pre-filled forms with previously entered content. I like this option because when you create a bill for, let's say, for Time Warner or Comcast, and you classify it as utilities, the next time you create a bill for the same vendor, is going to suggest the exact same account. The only drawback with that option is that it also suggests the same dollar amount. And if you're not careful, you may, by mistake, start accepting transactions without really looking at that dollar amount. So I'm going to leave that on, but just be extra careful to make sure you're always putting the correct dollar amounts. And then we got this option here called copy estimates to invoices. That's a crucial feature because I create a lot of estimates, and once my customers or potential customers accept that estimate, I want to just copy that estimate into an invoice so I don't have to recreate the transaction over again. So definitely turn that one on and click on save. And then let's see what else we got. Time tracking. Add field service to timesheets. Well, won't worry about that for a minute. We'll talk about that more on the plus side where we talk about job costing and timesheets. Make single time activity billable to customer. Let's turn that on for now. Leave that on. We don't need to mess with that. We'll talk more about the job costing and the billable time much later on as we get deeper into QuickBooks. And then everything else is pretty much standard. You know, are you using multi-currency? What's your home currency, which is mostly dollar? And then, you know, what's the date format, number format? Oh, this one's good. Customer labels. How do you call your customers? What do you call your customers? So if you think it's easier for you to call your customers clients, or call your customers donors because you're a nonprofit maybe, or call your customers members, or call your customers patients, tenants, or guests, just to make it easier. So when you're clicking on things in QuickBooks, it's using your terminology, you certainly may do that. I'm going to put clients because I call my customers clients. Click save, and then click done. And that's it for the overall look at the settings. And I know that was a very long time to get to the software, but you know, when you have your QuickBooks set up correctly, your experience is going to be much better. Now the very next thing is going to be your chart of accounts. So to get to the chart of accounts, we're going to click on the gear menu up here in the top right. Then we're going to click on chart of accounts. Now in the chart of accounts, you're going to see what QuickBooks set up for you at the beginning. Now this is going to be a very basic chart of accounts. It's going to be very generic. It may or may not contain all the accounts that you need. Actually, for sure, it won't contain all the accounts because you have to create your bank account, your credit card account, your loans, all of that stuff. So these are split into two categories. You're going to see all the accounts that have what's called a running balance or a QuickBooks balance. So you will notice that there are some accounts that have a dollar amount associated with it. At the moment, it's a zero. But all of these that have a dollar amount associated with it, that they have a QuickBooks balance or a running balance, these are called balance sheet accounts. Balance sheet accounts are those categories, those accounts, those categories of value that are going to be in your balance sheet, which is one of your two primary financial reports. And then anything under that, they're going to be profit and loss or income statement accounts. And these accounts will put together your profit and loss report or your income statement report that represents your sales, your costs, your expenses, and your bottom line, how profitable you were in your business. You will notice that all the profit and loss accounts have a run report button on the right side, and then all the balance sheet accounts have a view register button on the right side. That's also sort of another way to know whether it's a balance sheet account or a profit and loss account. Let's start by creating our bank account. So we're going to click on the top right. We're going to click on new. You also have a drop-down menu for import. If you happen to have a chart of accounts in Excel, you can do that. We're not going to go through that in this particular video, but you could import them from Excel. Or of course, if you're coming in from QuickBooks Desktop, is going to bring that chart of accounts with it. But if you're starting from scratch, you're going to have to create all these accounts one by one. So we're going to click on New on the top right, and we're going to start with our bank account. So we're going to click on Bank, and then I normally like to name these the name of the issuing bank and then the last 4 digits of the account number. So we're going to call this one Chase. I'm going to call it Chase Checking, and I'll put the last 4 digits, 1122. So that's the last 4 digits of my bank account number, not my debit card, my bank account number. And then here it says a number, that's actually the account number itself. We'll get to that later on. I'm going to skip putting a number there for now. You don't have to put anything there. We'll just put here Chase Checking 1122. We'll leave it as that. Now let's assume I'm setting up my QuickBooks file for the first time in the year 2018, and I do want to bring an entire year's worth of data. So when I close 2018, I have a full year, so I can do my tax returns and have a full year's worth of accounting. But if I have an account existing from before, I had a running balance from before, I got to go get the bank statement that closed on 12/31/2017, and I have to write down that ending balance in QuickBooks in order for that balance to come in correctly. So I'm under balance, I'm going to put whatever that opening balance is. So let's start by setting up the bank. So we're going to click on New on the top right, and we're going to select Bank as our option. So we're going to click on Bank, and there's a couple of options here under detail type. For the most part, I don't get too stressed out about these. If you get this wrong, it's not going to be a problem, but QuickBooks does force you to select one of these. So we're going to select Checking, and then we're going to give this a name. We're going to call this Chase Checking. Let's make it all caps. That'll probably be better. So Chase Checking, and we'll give this last 4 digits of the account. It's really important to bring in the last 4 digits of the account, especially if you got multiple accounts going on. Then under balance, we're going to literally grab the bank statement from the closing period from 12/31/2017, and we're going to bring that in, because then we're going to actually do the accounting in QuickBooks for all of 2018. So we're going to open up the actual bank statement. So I open the actual bank statement that I happen to have in my computer. You may have it printed. That's totally okay. And we're noticing here that it is for the ending of the year. And we're also going to copy that ending balance. Obviously, different banks have different ways of showing those bank statements. So we put in that ending balance without the $sign, and we put here 12/31/2017, and then we click on Save and Close. And that's how we added our bank account. Now let's add all of our bank accounts. If we happen to have multiple bank accounts, multiple banks, you want to bring all that stuff in with its beginning balance. Let's now bring a credit card. So I'm going to click on New. On the category type, I'm going to go down to credit card. And then under credit card type, there isn't any other options, so we'll leave that there. And we'll call this one Chase Visa, and also put the last 4 digits of the credit card. And we're going to go to balance, bring that balance over. Let me pull up my credit card balance. Okay. And it looks that for this particular statement that closed on 12/26/2017, which is the closest statement I have for the ending of the year, the balance is 7,000 and change here. So I'm going to take that balance and put that on that that credit card that we're creating. So I'm going to bring that in. I'm going to paste it in there if I happen to copy and paste from another file, or you just hand key it. This one was 12/26/2017, and we'll go ahead and click on Save and Close. And there we go. We got our bank, we got our credit card. Let me add a loan. I also happen to have a loan with that bank. So I'm going to click on New. And for a loan, I'm going to click Category Type, click on the drop down and select Long-Term Liability. This particular loan is payable in 5 years, so it's going to be a long-term. But if you have anything that's a line of credit or something that's payable within the year, then you want to pick current. That's basically different. Current is we're going to pay it off within the year, and long-term is going to take us more than a year to pay that off. So I'll pick on long-term, and then we'll call this one, let me see what we got here. Let's call it a note payable. That's right. We'll call this one Chase Loan 5-year. We'll call it that. And then the unpaid balance for that loan, let's pull that up. Okay, and that's 32,752. So we're gonna put that in there, and that was as of 12/7/2017. So 32,752. Let's put that in there, 32,752, and that's as of 12/07/2017. Not all statements are gonna have that pretty end of the year, end of the day, end of the month, end of the year dating philosophy. So you have to get the statement that is closest to the end of the year, but it doesn't cross to the beginning of the year, because we want to get a complete set of financial statements for the current year. So it's okay if we have something that's around December somewhere, but the one that we have closest to the end of the year, and we hit save and close. And this is a moment that maybe is worth it for you to sit down with an accountant, just because it's difficult for most folks to know what goes in the balance sheet, what balances do we need to bring over. Most of the times we actually take the tax return from the previous year, and hopefully the accountant put a balance sheet together, and we want to make sure we bring in all those balances. If you don't have an accountant, you have my email below. You can hire me. I certainly help a lot of people with their QuickBooks and their taxes. But if you have your own accountant, contact your accountant. This is a great moment for you to work with your accountant to get that chart of account started, especially because bank, credit card, loan, that was pretty easy. But then what gets a little bit tricky is adding your assets and the accumulated depreciation and that sort of thing. Let me show you an example. So I'm going to click on new, and let's say that I have two assets. I have some computer equipment and I have a truck. So I have to create each asset that gets depreciated separately into the books. So I'm going to click on fixed asset, and this one's going to be, let's see what options we have here. Fixed asset computers. Okay, that was the option. And if you can't find what you want here, just click on other fixed asset. But in this case, there was something that made sense there, and we'll call this one computer equipment. And let's say that this, I think I misspelled this, computer equipment. And then let's say that I originally paid $5,600 for that computer equipment, and I'm going to put there as of 12/31/2017, because that was the value at the end of the year. Now that doesn't include depreciation. Depreciation would be another thing. There's a little checkbox that says track depreciation for this asset, and then I can actually bring in my depreciation. And again, that's where an accountant helps to kind of help you figure out where this number comes from. But normally you copy that, or you take that from your tax return if your accountant does depreciation calculation. So let's say what we have depreciated so far is $3,200 as of 12/31/2017. And then I click on save and close, and QuickBooks will actually create my asset for $5,600, and then we'll create what's called my counter asset, or my contra asset, which is a depreciation that gives me the net value of the equipment. Let me do the same thing with my truck. I'm going to click on new, click on my drop down, and then look for fixed asset. And then let's see what options we have here. We should have something here for vehicles. Our vehicle, that's perfect. So we'll pick vehicle is the last one, and we'll call this one Toyota truck, and I'll give it the year. So let's say it's a 2015, and the original cost for the truck was $36,890. Typically that will be in your fixed asset report. So I'll put 12/31/2017. I'll click on track depreciation for this asset, and let's say that we have depreciated in 2 years. Let's say it's $12,950, and we'll put there 12/31/2017. Again, that's the pattern. We're doing accounting for the whole 2018 year, and we're bringing in these assets and these liabilities from the previous year. Let's say I also have a loan from Toyota. So I'm going to click on new, and then I'll create another long-term liability. So I'll click the drop down, and I'll click on, let's say, long-term liability, and we'll call this one, that's fine, it's a note payable, that's right. We'll call this one Toyota finance loan, and let's say that what I owe on this loan is $21,560, and that's also as of 12/31/2017. So notice I'm putting the cost of my vehicle. I also put the depreciation, and I'm also taking into account the loan, what I owe to the bank, right? Because I didn't buy that truck outright. And there's other elements in the balance sheet that you may need an accounting professional to walk through it with you. If you don't have an accounting professional, and again, and this is confusing for you, you can skip it. But at some point in time, you are going to have to enter those balances, because if not, your books are just not going to be correct. Now, after my chart of accounts is done, at least the balance sheet portion, we can pull a report and we can see what that's going to look like at the end of the day. So we're going to click on reports. We're going to click on balance sheet run. And then normally what I do is I'll run a balance sheet for last year. So we'll do last year here under the report period section. And I click on run report. And we're going to see what that looks like. So we're going to notice that our balance sheet now hopefully matches our tax return, our other balance sheet that we've done for the previous year. We should have our banking ending balance, our assets and our depreciation. So we have our total assets. Then we should have our credit cards, our credit card balance. We should have our car loans, our other loans. So we have to construct our entire balance sheet. So that's great. Let's go back to the chart of accounts. And let's now take a look at our profit and loss report. Our profit and loss accounts. So once we scroll down to all the accounts that have a running balance, you want to make sure that you also create your equity accounts. I don't want to get too much into that, but you want to create your equity accounts. If you have multiple partners, you may want to make sure that you do create each partner's account, because each partner has the capital they put in and the capital they take out, the distributions they take out. If it's a sole owner, then you can just have one account called owner's capital, owner's pay, whatever. But if you have multiple owners, then you want to make sure that each owner has its own capital account. And typically this opening balance equity you see here, this 50,800, that is going to then be divided across all the partners, and that's how the balance sheet balances. Let's skip balance sheet stuff so we don't get too much into the weeds on the accounting or the accounting elements of this. Let's go now down to the profit and loss. So we currently have 5 income categories that QuickBooks created for me: billable expense income, sales, sales of product, shipping income, uncategorized income. You may want to think about whether or not you want to use those. You want to delete some of them. Let's say, for example, the sales of product income I don't care about, so I can click on the drop down and click on delete and hit yes, and that will get rid of it. So then I don't need that category anymore. Let's say shipping income. Let's say I don't charge income, so I can just click on delete and I can start getting rid of them. Some of them it won't let you do it because you have enabled certain options. Remember when we were in the settings, we clicked enable shipping. That account cannot be deleted because the shipping line is going to go there. So that makes sense. On categorized income, let's say I want to delete that, hit yes. It doesn't let me delete it because that's a default category that QuickBooks uses when you don't know what to do with a piece of income. And let's see if I can delete billable expense income. Click yes. Okay, it did let me delete that. I assume that if I turn on billable expenses for customers, again, it won't let me delete that. So now we're down with 3 income categories. Now let's take this one called sales and let's edit it. And I'm going to click on edit, and then I'm going to call this one computer sales. Let's say that my company sells computers, sells training, and it also sells parts. So we're going to call this computer sales. Okay. So we have one income category called computer sales. I'm going to click on new. And then we're going to go to category type and select on income. And then under detail type, if you can't really figure out what works best here, pick the one that works best. Again, this detail type is confusing. Don't worry about it being right or wrong. Half the time it doesn't matter anyway. So we're going to call this one training income. Okay, because that's another category of income that we have. And then we said the other one was parts, just miscellaneous parts. So we go down into our category type, select income, and detail type. We'll do other primary income, and we'll call it parts sales. Perfect. So let's see what we got here in our income category. So now we have computer sales, part sales, shipping income, training income, uncategorized income. Okay, so let's say on the cost of goods sold side, which are direct expenses, let's say that we want to create 3 categories. We're going to have computer cost, part cost, we're going to have shipping expenses, and then we're going to have subcontracted trainers. So I'm going to click up here to new, and let's start with category type. I'll pick cost of goods sold. And we'll start with, let's see, cost of labor. Okay, cost of labor is fine. We'll call this one subcontracted trainers. Okay, that's when we used third-party trainers to do some of the training for our computer work. Let's go to new and let's create another cost of goods sold category. Again, cost of goods sold is my direct expenses. Let's see what we got here. Let's see, supplies and materials, and we'll call this one cost of computers sold. So that's whenever we sell a computer, the cost element of that, we go to that account, and then we click on new, and then we go to category type, go to cost of goods sold, and the other one was cost of parts. So cost of parts sold. Oh, I didn't select the detail type. This was supplies and materials, and unfortunately when you change the detail type, it renames it up there for you, so you have to redo it. So cost of parts sold. And one thing that I don't know if you noticed, but profit and loss accounts or income expense categories don't ask me to enter beginning balances. Beginning balances are only for balance sheet type of accounts. So we click on save and close, and we have a pretty nice setting here for all my income accounts. I have all my cost of goods sold accounts. This generic cost of goods sold one I can try to delete. Let's see if it lets me. And yes, it did. All right, so we want to get rid of all the accounts that we don't want to use to avoid any confusion. I think I forgot one more. I think it was shipping costs. So let's go to new. Let's go to category type, cost of goods sold, and we'll do shipping, freight, delivery. We'll call this one shipping costs. Okay. And what's nice about having your own terminology, your own names in the chart of accounts is because you don't want to really just get stuck with whatever QuickBooks gives you. You want to use stuff that makes sense to you, that makes sense to your business, that ties to the activities of your business. Okay, so now we got income and cost of goods sold. Let's take a look at our expense category. So we have advertising and marketing. That's good. We have ask my accountant. That's when you really don't know what to do with a particular category and you just send it there because you mean to ask your accountant at some point. Bank service and charges, car and truck. Okay, we're good so far. Contractors. Let's say we're not going to have contractors in here. So I'm going to click on delete because our contractors are going to be under that other category we created, which was subcontracted trainers. So again, I'm starting to clean up and delete things I don't need. Job supplies. Okay, let's say that's fine. Legal and professional fees, travel and meals and entertainment, office supplies. Actually, meals and entertainment shouldn't exist. Let's change that. Let's go to edit because in the 2018 U.S. tax law, they killed entertainment. Entertainment is not even a deductible expense anymore. So we're just gonna call it meals with. Let's call them meals with customers. Okay, that way we have probably a little bit better terminology that makes most sense to most people. So we got meals with customers. Where are my office supplies and software, other business expenses? That's kind of a miscellaneous category. Reimbursable expenses. Let's delete that. Let's say we don't need that. So again, I'm trying to clean my chart of accounts, make it as easy and friendly to use as possible. Okay, let's say what else we got? Rent and lease, that's good. Repairs and maintenance, tax and licenses, travel, uncategorized utilities, and depreciation. So let's say that's a good set of accounts. Let's say that I wanted to create some sub accounts. So under travel, I wanted to create some subcategories. So if you click the drop down menu here, it gives you the option to edit or delete. So let's say I like travel as a generic category, so I'm not going to edit or delete it, but I'm going to create some sub accounts under it. So let me scroll up. Let me click on new on the top right. We'll click on the category expenses, and under detail type, we'll go down to travel. And again, if you can't get detail type, just pick other or something like that. It's not a big deal. So I'll pick travel, and then we're going to call this one airfare. Again, let's say I do want to keep details of that. So I'm going to do airfare, sub account of travel. There we go. And then down here, instead of clicking save and new, I'm going to click save and, instead of clicking save and close, I'm going to click on save and new. And we'll do the next one, category type, expenses, detail type, where are you, travel. And the next one was going to be lodging lodging, which is basically hotels, Airbnb, hostels, that type of thing. And that's going to be a subcategory of travel. Notice that I'm creating the new account, which is an expense category, and I'm making it a sub account of travel. Save a new. So we got airfare, we got lodging. Let's do expenses. Let's select here travel. What else we got? Let's do transportation. And that would be like taxi, Uber, subway, bus, all that stuff. So we got transportation under travel. Perfect. Save a new, and am I forgetting one? I got airfare, I got transportation, I got lodging. Let's do just one for miscellaneous travel. So let's go to expenses. Let's select travel again, and let's call it miscellaneous travel. Also under the travel category. Okay, perfect. And then we hit save and close. And now we're gonna scroll down and notice that I got my travel category, and then I have a little indentation letting me know that these are subcategories or sub accounts. So now I'll be able to not just put stuff under travel, I can put it under its subcategories. Another popular to do is for car and truck. So I'm gonna edit car and truck. I actually don't like the word car and truck because it gets confusing. So I'm going to change this to vehicle expenses. Okay, and I'll click on save and close, and then I'll create some of the sub accounts. So let's start with new, and let's go to category type, expenses, detail type. We got vehicle or car and truck. Is auto. There you go. And then we're gonna call this one gas. Okay, this is just for like fuel, gas, that type of stuff. Let me do gas / fuel, just in case I happen to type fuel in there instead of gas. Hit the subcategory, and this will be a category of vehicle expenses. There we go. Same thing. Click the drop down, save a new. Category type, expenses. You'll get used to it. It's a lot of work. You get used to it. But once you get the hang of it, you get it right every single time. So we got fuel. Let's do parking and tolls. Also make the subcategory of vehicle. And then click save and new. And let's do another expense category under auto. And let's do the car payment, car lease payment. So let's say, for example, we have a car that we're leasing for the company, and we're doing a car lease payment. Now, if you're not doing a car lease, if the car was actually purchased, it gets a little bit more complicated than that. I don't have time to get through it on this video, but for an actual purchase vehicle, you would have to have a portion of a payment going to interest, and the portion goes to pay off the loan, like to pay off the Toyota loan that we created. So you only have an expense category for cars when it's a lease. When it's a purchase, you have to split it between the principal, which goes to pay off the loan, and the interest. Okay, let's do save and new. And what else am I forgetting for auto? Let's do expenses. So we got the fuel. Let's do the insurance. So let's do auto insurance. Okay, let's type the whole thing up. Auto insurance, and let's do, what was it? Vehicle expense. And let's do one more, save and new, and we'll pick expenses. We'll pick auto. Let's do it. Auto maintenance / other auto. Okay, other auto and miscellaneous auto. That's under vehicle. Perfect. And save and close. Perfect. So now I got a real nice chart of accounts. I got my balances, bank, credit card, loans. I got depreciation of some of my assets. I have my income categories the way I want them. I have my cost of goods sold categories the way I want them. I have my expense categories, hopefully the way I want them. I even got some subcategories. And I know it took a long time to get here, but a nice setup, nice chart of accounts, good preferences gives you a real positive experience right from the get-go. So let's now go into banking. So we're going to completely kind of switch gears. We're already done with most of the basic configuration. Now we're going to connect our bank into QuickBooks so we can download those transactions. So we're going to click on connect. And we're going to select the bank that we want to connect. Now that's different from setting up the bank in the chart of accounts. When I set up the bank in the chart of accounts, I was bringing in those opening balances. By doing the actual connection, I'm going to bring in transaction by transaction. So I'm going to go ahead and log in. And then once you connect the bank, you're probably going to have a whole bunch of things showing up in your connection depending on how many accounts you have associated with that login. I happen to have some personal accounts associated with that, some additional loans, some other business accounts. So you want to make sure you select the correct ones that have to do with the actual account you're connecting. So I'm going to go ahead and select my checking account, match it with the checking account that my bank detected with my login. And then I'm going to select my credit card account, my credit card, then select my credit card that the login matched with the bank and select that. And then once I have both my bank and my credit card selected, I click on connect. And normally what that will do is it's going to bring 90 days worth of transactions. So if you actually happen to be sitting exactly on April 1st of 2018 and you're downloading these, you're going to get a perfect January 1st to March 31st number of transactions. But if you're not exactly sitting on April 1st, you're going to get too many transactions if you're doing this earlier before April 1st, or you're going to not get enough transactions if you do this at some other point later on after April 1st. So if you are in the particular case where you got too many transactions, then what you have to do is you have to delete the ones that you don't want. So let me show you how to do that. So I'm going to click on review your transactions, and I'm going to take a look at every transaction that I don't want. So let's say I don't want anything that's dated 2017. So I pick the first one that I don't want, scroll all the way down, hold the shift key, select the very last one that's in the list, and then scroll all the way up and then go to the batch actions and click on exclude selected. That's going to delete or get rid of all the things that I don't want that are before that January 1st, 2018 deadline. And if there's more there, let me select them as well. Select all the 2017 transactions, batch actions, and exclude selected. And let's see if there's any more. Okay, there's a couple of more there. Select that and exclude those as well. And I'm going to do the same thing with my credit card account. If you remember, my credit card account, the closing date was December 26th. So I want to delete everything before December 26th, right? Because everything after December 26th, I want to bring in because that was the last balance that we brought in. So let me exclude that, and that's perfect. Now, if you happen to be in a different situation where you did this after April 1st and you need more than 90 days worth of transactions, keep in mind QuickBooks is still stuck and limited to those 90 days. So you actually have to go into your bank login. You have to download a manual QuickBooks Online download file. It's called a QBO file, or some cases it's called a Web Connect file. You download that manually for whatever period you want, and then you click on this little drop-down menu that's here in the top right. Click on File Upload, and then you're going to browse the file somewhere in your computer, select it, click Upload, and then that's going to bring those transactions. So with the direct connection, the one where you just put the login information of the bank, it's limited to those 90 days. If you're going to need more than that, you have to download it manually through the bank, and you may need to watch a different video for that because that's another process. Or if you brought in more than what you wanted, you're going to exclude them or delete them the way I showed you how to do that. Now, I'm not going to get into the online banking in this particular video. I'll put some links below to a deep dive into online banking, just because there's a lot of things going on with banking and I don't want to make it fall short. So I just wanted to get you to that process where we actually connect the banks and get that stuff connected. Now let's talk about creating some transactions. So when you first set up your QuickBooks Online, the first thing you want to do is create your invoices, create your bills from your vendors, but at first you don't have any customers. So let's create some customers first. We're going to click on the sales tab on the sales menu on the left side of the screen. And then we're going to click on clients. Remember, we changed the terminology from customers to clients. And then the first screen is always going to look like this. It's sort of a very simple, simplistic screen. I'm going to put here Maria Lopez. Let's say she's my first customer. And I click on add client. It adds it to our database. Now my customer center looks, or my client center looks the way it's going to look moving forward. To add a new client, I click on the top right, new client, and then I get the screen the way it's supposed to look. Let's say one of my client names is XYC Health Corp, and I'm gonna put the address. Okay, optionally I can put their phone number, their website. I definitely want to put an email if I'm gonna send them an invoice. So let's call this payables at xyc.com. Let's say these are the folks that are going to receive the invoices that we send them. You can also add a different shipping address if you want to. You can add some additional notes. You can add tax info, which is basically their tax ID number if you're not going to charge them sales tax. Payment and billing info, this would be to override the default. So let's say that these people, we're going to give them 15 days to pay instead of some other amount. And also they usually pay us via check, or we always send them a printed invoice. So those settings you can change different than the default. There's also attachments. If you want to attach a client contract or something related, some document related to that customer, you can attach it there and always make reference to it in the future. So I'm going to click on save, and then that's how we create new customers. So now I have two new customers. Let me click on this button here and click on clients. So I got 2 customers in there, so we're good to go with at least our initial customers. Now let's click on expenses so we can create some vendors. We're going to click on expenses, and then we're going to click on vendors. And we're going to click on add vendor, and let's add here Comcast. And I'll click on save, and there you go. There's my vendor created. I can also kind of go the long route, click on new vendor, and let's say this is an individual that we pay for professional services. So we'll put here Carlos Smith, and we'll put here how you want the check to look, if it's going to be looking like his name. Let's say I do want to email him some information, so we'll put his email here, carlos@gmail.com, and we can put his phone number. Okay, and address as well. If I'm actually gonna print a check, it's important that I have an address in there. So if I'm gonna print him a check, let me put his address, First Avenue, Miami, Florida 33331. I can also add some notes. I can click on track payments as 1099 if I'm gonna pay him as a subcontractor and give him a 1099 form in the future. So I can click on that and put a tax ID. Not all vendors are gonna apply for that 1099, but you can. And I click on save. And then I may create one more vendor. Let's say we're gonna create a supplier that we buy product from. So let's say we're gonna buy from Dell Corp, and we'll put their address here. Perfect, click save. And that's basically how we create vendors. You can create them with their full information, address, or you can just create them by just typing their name. And that will be your vendor database, which is important for you to create your bills and your expenses. Now there's a tab here called workers, which is going to be both for employees, and you would have to enable payroll. Payroll is a separate service. It's between $25 and $40 a month, plus a monthly additional per employee. In the year 2018, they're changing the price structure a little bit. So it is possible that when you actually watch this video, the payroll service has a different price. But when you turn it on, I just pick on one of these here, let's say, and it's going to give me the 2 options here. It's going to have, I want to do payroll myself, and here's the fee. So according to this is $39 a month, and there's some discount. And then there's also full service, which basically moves the responsibility completely to QuickBooks, to Intuit, for paying and filing taxes. And that's $99 a month. Again, depending on when you watch this, you may see a different price structure, but that's what was available now. So $40 a month, full payroll. You can create your forms, pay your taxes, but you're responsible as a business owner, or $100 a month, and Intuit will take all the responsibility. So you have to enable that service as extra. You have to enable that service if you want to process payroll through QuickBooks. There's also another tab here called Contractors, which is going to include all the vendors. Remember, we created vendors just now that are marked with a little check mark that says this vendor is a 1099. So any vendors that are also marked as a track as 1099s, they're going to come in this group called Contractors. And we're going to create an entirely different video to kind of explain the 1099 preparation process. So we're not going to do it in this particular video, but there's going to be a separate video just to explain that, because that's going to have its own steps and its own sort of workflow. So that's how we created customers inside of sales and this customers clients tab. And then we created vendors inside of expenses and in this vendor tab. So you want to create the chart of accounts, the customers, the vendors, try to create those right off the bat. Now, one of the common questions we have is, what if these vendors have a running balance? We started our books this year in 2018, but our company has been open from before, and we owe some of these vendors money for opening balances. So you have a couple of choices. One is, if you have some open bills for vendors, you can create those bills in the past. That way you have them there and then you pay them in the future. Or two, when you actually create the vendor. So let's say we're going to create Microsoft as a vendor. Let's say we buy software from them. We will create them with a opening balance. So let's say we owe them $12,000 at the beginning of the year. So I put 12/31/2017. And then what ends up happening is, when we create this vendor, I'm going to click on save. You're going to notice that the vendor is created and it also has a running balance. And it gives me the capacity to make him a payment. So QuickBooks automatically created a bill dated 12/31/2017 to let us know that we may have one or multiple bills open from that vendor. Same thing with customers. When I click on sales and I click on customers or clients, if I have an open balance with any of these customers, I can manually create invoice by invoice for all the invoice that they owe me from the past. Or when I create a new vendor, same process as vendors. Let me see, I have ABC Contractors LLC. Let's say this is one of our customers. It's a corporation and they owe us money. So we're going to click on, where is my opening balance button? Maybe payment and billing. There it is, inside payment and billing. And we're going to, let's say that they owe us $5,600. And we put there 12/31/2017. And then click on save, and QuickBooks will automatically create one open invoice dated 12/31/2017, representing that entire open balance that we have from that customer from previous periods. Again, if you just started your business from zero, you don't have to worry about opening balances. You probably also don't have to worry about opening balances in the chart of accounts, but this is mostly for the folks that are starting a business and that are setting up QuickBooks from a business that has already been started from before. Now let's go on to creating our products and services, which is another crucial piece of the setup process. So we're going to click on the gearbox top right, and we're going to click on products and services. So once we go into products and services, the button is going to say add product or service. I can click on that, and it gives me three choices: a non-inventory, a service, or a bundle. And a bundle is really to group more than one product together. Let's start with service, and let's create our hourly training service, and we'll call this one level 1. And this one we charge $75 an hour for. On description, we're going to put hourly training with level 1 tech. Okay, so that's the description, and you're going to notice that when we create the invoice, we're going to skip putting a picture on that or a category for the time being. We're going to click save and close, and now we officially have our products and services. QuickBooks by default creates this one called hours and sales. We can make these ones inactive. Let's say if it lets us do that, batch actions make inactive, because we're really not going to use them. Just make them inactive for now. Actually, it doesn't let me do them. So by default, there's one called hours and sales that they have to be there. You can't turn them off. What can you do? leave them there, no big deal. Now this one called hourly training services, I can go back and click on edit. If I want to change it, I can click on the drop down, make inactive, or duplicate. I like duplicating because I don't have to create them over and over. So I'm going to click on duplicate, and we'll call this one hourly training service level 2, and we'll make this $150 an hour, and we'll do the description and call it level 2 tech. Beautiful. And then under income account, I didn't mention this last time, I want to make sure that I have the correct category that matches that item. So this one's going to be training income. So I made the mistake on the last item and I didn't put the correct income account. So let me click on save and close. And let's go to the other one and edit it and change that income account. So let's do training income, and then we'll click on save and close. Perfect. Now let's create an item for our products that we sell. So let me click on new, and then we're going to click on non-inventory part. And the reason why inventory part, which is one of the options, is not enabled is because we're working off QuickBooks Essentials, which is a version that doesn't manage inventory. So under name, we'll put here, we'll call it Dell Laptop B52. And on the SKU number, this could be like a technical number, right? So DIP5200-98B. So this is like sort of like the code or the internal code, and this is more of a descriptive name for it. And then we can have the full description, like, you know, Dell Laptop Model 52, you know, Type B, whatever it is, you know, i7 processor, 16 gigabytes of RAM, whatever you want to put in there. And then we're going to put our sales price. So let's say for this product, we sell it for $6.99, and the income account would be computer sales. So it looks like we're good there. We'll hit save and close, and there is our product created. Let's say we also have some miscellaneous cables that we create. So we'll go to new, and we'll do non-inventory part, and we'll call this one miscellaneous cables. Okay, and then we won't even give a SKU number, and let's say we'll put it for 10 bucks, and we'll change the category here not to be computer sales. That's going to be part sales. Okay, that's perfect. Part sales. Save and close, and let's create one more for like shipping expense. So let's go into a service, and we'll call this one shipping, and we'll send this one into our shipping category. So we basically, and let's say we'll leave this one at 0, so we change the price each time. So now we got a couple of items set up, and with our items set up, we are now ready to create some invoices. So let's go back into the dashboard here, and as of now, all we've done is configuration. We created some old invoices from opening balances. We created some old bills from vendors that owed us money. We created some accounts with opening balances, some accounts that were P&L accounts, profit and loss accounts that didn't have any balances. We created a contractor. I mean, we created our product services. We did a lot of setup at this point. Let's now start transacting. Let's create some transactions. So let's click on the quick create button on the top right, which is a plus sign inside of a circle. And then we're going to click on invoice. But before we do the invoice, let's do what usually happens, which is we create an estimate first. So we'll click on estimate, and then we'll select the customer that we're giving the quote or estimate to. So we're going to select ABC Contractors, and then we're going to give this estimate number. Let's say I want to start all my estimates with, let's say 3. So we'll do 300101. So that would be my first estimate number. And then QuickBooks naturally will take the next number one by one, but it'll always let you change it, because in the preferences, we actually gave it the option to turn that box on. If I didn't put custom transaction numbers in the settings box, you wouldn't even see that box, and QuickBooks will automatically give that a number. So let's say we gave this estimate on Tuesday, January 2nd, and let's say we are going to expire the estimate on January 31st, pretty much letting them know that beyond that, that price is still not valid. Let's say that we're promising to ship the product somewhere around, let's say, February 14th. And no tracking number for now because we just don't, we haven't sold the unit. And let's say we're planning to do this via FedEx, right? That's up to you. You don't have to use those shipping boxes. That's really up to you. Now, under product and service, I'm going to start putting what we're going to sell this client. So let's say we're going to sell this client 2 laptops. So we select from our drop-down menu our product, which is going to come in with our product name and the description. In the settings, somewhere you can actually add that SKU column there if you want to have the SKU number as well. But for now, we have it hidden. Let's say we're selling them 2 laptops, and we're also going to sell them some parts. So let's do miscellaneous cables, and we'll call this one extra charger or something like that, whatever it is. And we're going to sell them, let's say, 1 extra charger for $85. And let's add 1 more line for shipping. And again, that's because I created the shipping line because I want to have it up there. I can charge, let's say, $25 for shipping. But if you don't want to create a line, you can delete that. And since I enabled the shipping feature, I can just put it down here under the total. It would actually be the exact same effect. I like itemizing it just because it's a lot more clear, but some people like to see it right there on the subtotal. So we'll click on save and close, and that will be it. If we have this little box that says send later, it won't let you save it until you put an email address. You're basically saying that we are going to queue this to email this estimate later on in the future. So let's say we're going to go to abc@gmail.com, and then we'll click save and close. And that's it. Our estimate is done. Now, one of the things I like to do every time I create a transaction, I like to look at my reports related to my transaction. So I'm going to click on this little magnifying glass up here, and then I'm going to type here estimates, and I can see we have a report transaction list estimate. We can see this estimate report, so we can click on that, and it will give me a report of all my estimates. So that's actually great. I get a transaction list. I see my report. Let me go back into the dashboard, and let's see how we will find that transaction. And a different way of doing it is by clicking on the magnifying glass on the top right, and then this will give me a history of all my recent transactions. So I have my journal entries from all those beginning balances. We have that invoice from the customer that had an opening balance from last year, and a bill from that vendor that had an opening balance from last year as well. So I can click on any of these and go back into the transaction I was working on. The other thing I can do is I'm going to click X here on the top right. I can click on the quick create button and then go back into estimates, which is going to create a brand new blank estimate. But here on the top left, you're going to see this little like clock watch type of icon. When you click on that, it will show me a history only of my estimate. So I can click on that estimate and it will pull it right up. Now, I like working with estimates first before invoices just because it gives me good control of what prices I'm giving out there, but some folks go straight to create invoice. Now from here, what's nice is I can now mark the estimate from pending into accepted, and I can also record like who accepted it. So let's say, Jane accepted it, and I can put the date that she accepted it on the 4th of 2018. Okay, so that allows me to kind of record the fact that the estimate is not open, is accepted. So that's actually nice. I can differentiate between open estimates and accepted estimates, and I can click on save on the bottom, and then I can click on next to the dollar amount, I can click on create invoice. And what's nice about this is it's going to basically copy the entire contents of that estimate and create an invoice from it. Now at this point, I can select the invoice. Let's say it's dated on Monday the 8th, 2018. I can maybe even change the terms if I want to. So put net 15. And then now that I have a tracking number, I can put my tracking number up here. Again, that's only assuming that you do ship the product. That doesn't necessarily mean that you have to do any shipping. Now under invoice number, same thing. Let's say I want to have all my invoice numbers start with 1. So I'm going to put 100101, and then I want to give it the first invoice number, and then I want QuickBooks to manually assign that number afterwards. Now let's say during the sales process we renegotiated the price at $675. I can just simply modify it on the invoice. I don't need to go back into the estimate. I can modify it on the invoice, and then I'm all set. Now from here, I can click on print preview or preview, click on that, and then click on print or preview, and you can see exactly what that invoice is going to look like before you ship it. Notice it has my logo that I added from before, all the colors that I wanted, my company name, my phone number, my email, the date, invoice numbers, got all the stuff here, and the subtotal. So it's actually a super fast, quick way of creating your invoice. At this point, you can print it, or I can just click on X, and I can also email them straight from here. So I can go into bottom, all the way in the bottom right, you're going to see where it says save and send. I can actually click on the drop down and just save and close, or I can click save and share link, which basically gives me a link that I can manually put on an email saying, hey, click here to view your invoice and pay your invoice. But if you're using the email straight from QuickBooks, there's no need to do that. So we'll click on the drop down and click on save and send. It will send you to the preview screen, letting you know what this is going to look like on a PDF when you email it. You can actually change the text that gets on the body of the email. Notice that the subject itself has invoice number, it has the company name that is sending it from. If you want to accept a credit card payment, you hit that checkbox that says accept a credit card payment or a bank transfer, and you would have to have that payments account set up to be able to do that. I talked about that earlier when we were discussing the setup process. So at this point, we just click send and close, and then that customer will get via email that invoice, and then at that point, they'll send you a check, whatever it happens to be. So now I can just click save and close on the bottom right, and then I'm done with my estimate creation and invoice creation process. Again, I can click on the magnifying glass, and I can click on invoices. I can type invoices, and it'll tell me all the reports that have the word invoice on it. So I can click on reports invoice list, and then notice that, let me do dates all, so it shows all the dates, and you will notice that all the invoices, old and new, are showing on this report. So I really like having, checking what's going on there with the reports, because it kind of gives me instant feedback of what's going on. So that's how I create an invoice. Now let's say that I am now gonna pay someone a bill. I owe a vendor some money, let's say for the purchase of those 2 Dell computers. So I'm going to click on the quick create button on the top right, and then I'm going to click on bill. This is where I create my accounts payable, my bill. I'm going to create on bill, and let's say that the product arrived from Dell. So I select my vendor, and then let's say they give me 60 days to pay, and the product arrived on, let's say, the 5th, and that equals to the bill date. So it automatically will take the 60 days, add it up on the due date, but I can also manually change the due date if I want to. Now under bill number, that's going to be the actual number from the vendor. The vendor will send me an invoice. I'm going to transcribe the vendor's invoice in here. So right here under account, this is the category in which I want that expenditure to go to. So that would be cost of computers sold. Perfect. And let's say that my cost for those computers that were sold was, let's say, $12.50, and I also paid for some shipping. So we got shipping costs, and let's say I paid $15 for the shipping on that. Okay. Now notice that it's not asking me for the actual name of the product, the actual product or service. Is asking me for the account from the chart of accounts, and the reason for that is because we haven't enabled the inventory portion where our purchase orders or our bills contain the actual product that we're buying. So I'm going to show you that in the preferences in a second. So I'm going to click on save and close, and let's say I finally finished and entered the bill from our vendor. Now I'm going to click on no thanks here because I don't know what they're selling me. And let's go and check out what's going on now. So I'm going to click on reports. I'm going to click on profit and loss, click on run, and then under dates on the top left, usually you have your date period. So I'm going to click this year and then click on run report, and we kind of see what's going on. So I have my sales right here, 1460, my sales, my part sales, my shipping income. Then I have my cost, the cost of my computer, cost of shipping, right? And then I have my profit, 195. And again, I like to pull these reports as I go because it gives me a really good understanding of exactly what's going on as I create all these transactions, right? You want to know what's going on with your reports. The other report would be the balance sheet. So I'm going to click on reports, then I'll click on balance sheet, and I'll click on run. And then let's do period this year. So it contains all the transactions from this year. Click on run. And I have my bank account at that exact same dollar amount that I started with. But accounts receivable is 7,060, which is basically, I'm going to click on that, is basically all of the open invoices that I have. So once I click on that, it gives me a detail. Let me go to all dates and click on run report. And that should give me a good detail. Let me zoom out. That gives me a detail of all my open invoices. So I got my old open invoice from before, 5,600, and then my new open invoice, 1,460. So that should be very clear of what is happening to my books as I create all these transactions. Now, let's move on to receiving a payment for that invoice and then making the payment for that bill. So let's click on the quick create button, on the top right, and then we're going to click on their clients, click on receive payment. So we'll click on receive payment, and let's say that our customer that paid us was ABC Contractors, and let's say they paid us let's say $6,000 flat. They paid us our old invoice and also part of the new one. So let's say they paid us on Monday the 8th, and the dollar amount was $6,000 flat. Automatically QuickBooks will apply the total dollar amount to the old invoice and then the balance to the current invoice. That's actually pretty neat how QuickBooks does that. But I can actually uncheck these if I want to, manually uncheck these if I want to, and then select manual amount. So let's say if I wanted to select 1,460 to completely go to the new invoice, and then the balance of the 6,000, I can put it in here, and I can leave the old invoice partially open. So I actually have full control over how I want to apply those payments. I'm going to try it again, do 6,000, and then let QuickBooks apply it automatically just because it's simpler and easier. But just know you have control over that. And let's say they paid us with a check, and the check number was 5596. And then under deposit to, you can go straight into the bank, assuming that when they paid you, the money went straight into the bank. That is a category of type of transaction. But what I always recommend to do is to click on Add New. Let's click Add New again, and then under Account Type, we're going to click on Other Current Assets. And then under Detail Type, we're going to go down to Undeposited Funds. You always want to create an account called Undeposited Funds, just because assume that you get paid by 2 customers, 3 customers in 1 week, and you want to group those deposits together and go to the bank all in one shot. And that's a very common thing, because when we go to the bank and deposit multiple checks, our banks in our bank statements never really separate those payments and clearly identify in your statement who paid you what. Normally is that lump sum deposit that all gets bundled together. So in order to emulate that same thing that happens, you want to receive your payments into that undeposited funds account, and then as you receive other payments and you group them together and you make one lump sum deposit, your bank statement looks exactly like your QuickBooks. So let's do that example. Let me click on Save and Close. And let's see, make sure that I have correctly applied all these payments. This was 400 over here in order to get the 6,000. Yeah, let's do Save and Close. Perfect. So I received that payment. Let's say that I have another client that walked into my office and bought something, let's say for $400. So I'm going to click on Quick Create button. This time around, I'm not going to do invoice, receive payment as 2 separate transactions, just because it happened pretty much all at once. They walked in, I sold them the product, they paid me. So I'm going to go to sales receipt instead. A sales receipt is an invoice that has a payment built into it. So let's say that was my customer Maria Lopez, who walked in, and that happened on, let's say, Tuesday the 9th, and we sold them some miscellaneous parts, and it was $400. So let's put here $400, and notice how QuickBooks automatically gives the sales receipt number in continuation from the invoice. And deposit to, as I mentioned before, we're going to go into undeposited funds, and let's say she also paid us with a check, and the check number, we'll type it here, and then we'll click save and close. Let me uncheck this send later box, that way it doesn't force me to have their email in there. And then click on save and close. So we basically received two payments, one $6,000 payment from an invoice and one $400 payment from a sales receipt. But let's say when I go into the bank, I make one deposit for $6,400. So when I want to record that, I'm going to click on the quick create button, and then I'm going to click on bank deposit. And then on the bank deposit window, I will select both of my customer payments, ABC Contractor and Maria Lopez, which adds up to $6,400, and it is $6,400, which happened to be the exact same dollar amount that we deposited on Wednesday the 10th. And we want to match that bank deposit with that lump sum deposit that contained multiple customer payments. So we're going to go ahead and click save and close. And that's how you record a deposit using undeposited funds when you have multiple payments in a single deposit. Now, if that wasn't the case, you don't have to go into undeposited funds. You can simply just go to receive payment. Let's say that my customer ABC Contractors paid me my balance of $1,060. I can just put here $1,060, and let's say they paid us in cash, and I can go straight into the bank. That's assuming that I'm not grouping that deposit with any other customer check. So you could also do that. You don't have to complicate yourself using undeposited funds. But if you ever happen to be working with a company or your own business and you bundle deposits, group them together, you're going to have to use that sort of clearing temporary account to be able to group them together and match it with your bank statement. So we're going to click on save and close, and that takes care of that. So you can go either way. Now I'm going to click on banking real quick just so we can kind of see what's going on here. We're going to click on banking, and then we're going to click on go to register. We happen to be on that Chase checking account. We're going to click on go to register, and then we're going to see a check register that contains the entire history of what's going on. We're going to see our opening balance that started for $86,000. Then we're going to see a deposit for $6,400 and a deposit for $1,060. So notice how my bank balance goes up because I'm receiving payments from my customers. Now let's move on to making payments of bills. So when I click on the quick create button, we created a bill earlier. Let's now pay that bill by clicking on pay bills. Once I click on pay bills, I select the bank account that I'm paying from. You could also pay a bill from a credit card. That's totally feasible. And let's say we're going to pay Microsoft a check for, let's say, $4,000. And we don't have the whole amount to pay him yet. And then we're also going to pay Dell Corp, and we're going to pay him the whole thing. Now, under starting check number, if you're going to print the checks, you're going to put the check number that's on top of all the pre-printable checks. So when you print, it goes in sequence. If you don't print them, just put any number here that pertains to your manual check number, and you're gonna pick this up from your actual checkbook. And then we're gonna click on save or save and close, and this will assign to one check number 55658, and to the next check it will assign check 55659. So make sure that all that stuff matches. So once I click save and close, the bills are marked as paid. I can click on no thanks, whatever that pop-up was, and then I can take a look at in my check register how these checks were assigned check numbers. I want to double check with my paper checkbook to make sure that those bills that I'm paying actually match those numbers. Now that's assuming that I'm paying multiple bills at once. I could simply just go to the quick create button and click on pay bills and just pay one at a time. So I can select my Microsoft, and then I can pick the actual check number, and I don't have to really worry about the check number sequence. You could also go that route. You could pay one check at a time if you want to, and just put the actual real check number in there. The thing is that in the year 2018, most people print the checks, at least print the checks for actual checks, or pay electronically with a credit card or some other bill payment system. So that takes care of paying bills that have already been created in the system. There's also two other transactions that are really interesting, which is this one called expense and this one called check. When I click on expense, it gives me the ability to pick two potential sources. I can pay an expense from a bank account, or I can pay an expense from a credit card account. If I pick a credit card account, I'm actually recording a charge that's being paid with one of my credit cards, not my bank debit card. My bank debit card would be my actual checking account. We're talking about the actual credit card that carries over a balance. So I'm going to pick the credit card. I'll pick the vendor that I'm paying. Let's say this is Comcast, and I'll select my category, utilities. I'll select the date that the charge went through. Let's say it was Monday the 1st. And then under payment method, I can just put credit card. And let's say the dollar amount was $396.52. And if there happens to be a reference number recorded, if there isn't one, don't record it. Let me click on save and close. And we're outside of the expense transaction. Now, the expense transaction does not affect my bank register, but it will affect my credit card register. Let's go into my credit card register up here, and you will notice how we have my opening balance and then the $396.52. Let me go back into the quick create button and click on expense again, and let's say I'm gonna put a charge that came out of my bank directly or paid with a debit card. So let's say I paid, let me go to add new, and let's say I paid McDonald's. Okay, and I went to McDonald's, I ate there, and it's with a client. We'll call this meals with a customer, and let's say that happened on the 3rd, and I use my business debit card. So I'll pick my actual checking account, and let's say that was $26.95. And if there's no reference number, no need to put it. Payment method, I can put credit card, but I could also leave it blank, or I can go to add new and create one called debit card. Whatever is easiest for you. You can pick whatever you want, or leave it blank. That's actually not an important box at all. I find that it's way too time consuming. So I'm going to click save and close. And that's how I record expenses that are electronic payments, debit card transactions, or credit card transactions. If it's going to be an actual check, we click on the quick create button and then click on check. And then we'll select the vendor that we're paying. So let's say we're paying Carlos Smith, and this is a subcontracted trainer, the category. And again, knowing or memorizing that chart of accounts becomes really valuable. We'll select the check number here, and then we'll put $5,000, whatever is it that we are paying them. We'll put the date of the check. Okay, this could be a check that I print, so I can click on print check on the bottom of the screen, or a check that I handwrite that I'm basically just entering in QuickBooks manually. And then I click on save and close, and that will be it. But just remember that if you're gonna pay a check that comes from a bill, you never want to use the write checks function. You want to use the pay bills function. So for example, let me go to enter bill. So I'm going to create a bill, and I'll create a bill for the same vendor, Carlos Smith. Let's do here subcontracted trainer. Let's say that this bill came in on the 3rd of January. Put a bill number there, and let's say this was for $2,600. Okay, I'm gonna go ahead and click save and close, and there's a bill created. If I try to pay him with a check and not use pay bills, so I'm gonna click on check, and I select my vendor, so Carlos Smith. Notice that I'll get a little drawer show up from the right, letting me know that, hey, maybe you're trying to pay a bill instead of writing a check. And if that's the case, then we click here on add, and that will now convert this into a bill payment instead of a write check, and then it will be entered in the system as a bill payment that's actually attached or applying to an active open bill. So I'll click on save and close. And that's the difference between writing a check outright and using pay bills. Now, if I click the drop-down menu and go back into my Chase checking, I'm in the register screen. I can actually see all the debits and all the credits affecting my bank balance. That's actually a really nice thing. So that's where you start seeing things that make sense. So far we've created an estimate, a sales receipt, we received a payment, we've done an invoice. We haven't done credit memos, refund receipts. We'll leave that for a different video. We've also done expense, we done check, we done bill payments. We haven't done purchase orders yet because this is not the correct version of QuickBooks that can do that. We talked about payroll briefly. We'll skip that. We'll do a different video for that. We did bank deposits. We haven't done transfers, journal entries, and statements. So let's go ahead and do that. So let's start with a transfer. And a transfer is simply to record a balance sheet to balance sheet transfer of funds. So let's say, for example, that I'm going to pay off my credit card balance with my bank account. So I'm going to go to Chase Bank as the from account. And then I'm going to go to transfer funds to. I'm going to go into my credit card, Chase Visa, and let's say I'm paying off a balance of $5,000. Now, what's really cool about this is once you type $5,000 in there, you're going to see how these balances shift, right? You're going to see the $73,000 go down by $5,000, and you're going to see my credit card go down by $3,000. And let's say that payment happened on January the 8th, and we'll click on save and close. And now if I go back to my bank register, which by the way, we click on banking, and then we clicked on go to register. That's one way of going into the bank register. You can also click on the settings button in the top, and then I can click on chart of accounts, and then I can click on any of my bank accounts where it says view register, and that's another way to get into the register screen. So you always want to look at the register screen, take a look at all the deposits and payments that are affecting your bank balance, right? Where's my $5,000 to my credit card? There it is. If I switch over to my credit card, let's go to the Visa, there it is. I should see the couple of charges that we entered, the Comcast charge, and then I can see the balance of $5,000 being paid down, and that effectively lowers my bank balance on my credit card balance. So what this shows you is how you do things in QuickBooks to run your business, run your customers, run your bills, your accounts payable, accounts receivable, and also always ties down to the bank. And you want your QuickBooks balance to match your real bank balance. And that's essentially what accounting is all about. Now, once I do that, I want to essentially at some point reconcile my bank. So when January comes in and I close the month, I'm going to click on the settings button on the top right on the gear icon, and then I'm going to click on reconcile, and then I'm going to click on reconcile account. I'm going to select my bank account that I want to reconcile. So let's say I want to reconcile the checking account. I'm going to pick the ending balance on, let's say, the 31st of January. I'm actually going to grab that bank statement just like I did with the opening balance, and I'm going to enter now the ending balance of my January. So let's say that's 65,000, whatever it happens to be. Then I click on start reconciling, and what I'm actually going to do is I'm going to pick up my statement, my paper statement, and I'm going to check off in my paper statement one by one as I see things that are in QuickBooks that match my paper statement. So let's say, for example, this check cleared, and this McDonald's charge cleared, and this check cleared, and let's say this check didn't clear. So we'll skip that, and then we keep going, and we'll see every check that clears, every deposit that clears, and at the end of the day, this difference should amount to zero. If you're doing your reconciliation correctly, that difference should amount to zero. I welcome to check out YouTube for other in-depth bank reconciliation videos, because this is another area that just requires a lot of moving parts, and trying to make this video an hour tops, possibly even more, but maybe not more than 2 hours, limits the time that I can go deep into reconciliation. So you want to search QuickBooks for QuickBooks Online reconciliation or how to reconcile to go deep inside this particular screen. But the concepts are exactly as I explained them. Let's talk about reconciling the credit card. It's going to be the same exact concept. So we're going to click on reconcile, and then we're going to change the account from the Chase checking into the credit card. And yes, you want to reconcile your bank account and reconcile your credit cards, because if you are putting a beginning balance in there from where we're doing the chart of accounts, and then you're going to enter every one of the individual transactions, you have to reconcile it to make sure that it's complete. So let's say this one closes on January 24th and the ending balance is 3,500. We click on start reconciling, and then we're going to do the same thing. We're going to mark off any payments and any charges that are on our paper statement, and once we're done, the difference should be 0. Okay, let's get out of that, and that covers reconciliation. Let's see what else we haven't covered yet. We didn't cover journal entry, so let's do journal entry real quick. And again, this is one particular section where maybe you want to get some help with an accountant. Most small business owners never have to do any journal entries at all. This is more of a sort of an accountant type of transaction screen. But if you wanted to, for example, record something you can only do through a journal entry, like the depreciation of your vehicle for the month, you would do it through here. So you'll select the month that you want to record that. I'll put here my depreciation for my Toyota, and then that would be the actual asset account that we're reducing. And then we're going to go into our depreciation expense, and we record it here. So let's say the depreciation for the month, it's 560, and I just put 560 debit, 560 credit. Why is credit? Why is debit? I recommend that you learn accounting or take some sort of accounting course. That's actually a very in-depth explanation. But all I wanted to cover is how to do a journal entry, which means you select the 2 accounts that you want to make adjustments for, and you select the dollar amount, 1 debit, 1 credit. It needs to balance, and then we click on save and close. Again, if you're a small business owner or a non-accountant, you probably shouldn't have to worry about recording depreciation in the first place, but journal entries are essential for adjusting balances on any type of account in QuickBooks, and that's essentially what journal entries are. And then lastly, on this side, we have our statements. Let me click on statements, and that's for me to send a list of invoices and payments that are inside the history of a customer. So I'm going to click on customer balance status, click on all, and then under ending date, I'll pick the 31st of January, and then I'll click on print and preview, see what that looks like. And basically what a statement is a list of open invoices, payments, open invoice payments, and that's how you explain the running balance of a customer with a statement that contains the totality, invoices and payments, pretty much transactions that affect your customer balance. So that is statements in a nutshell. Now from this screen, really nothing else. I want to talk about inventory at purchase orders, but that's going to require me to upgrade my QuickBooks to the Plus edition. And on the gear menu, we covered account and settings. We've covered chart of accounts. We covered configuring the invoices at the beginning. We covered products and services. We haven't covered importing any data. We covered reconciling, and that's really all we've covered, and that's what we're going to cover on this video up to that. Let me go into my settings and upgrade my account to the Plus edition so we can cover the extra features that the Plus edition has. I'm going to click on billing and subscription, and I'm going to click on upgrade here. And then the upgrade will give me basically one choice to go from Essentials to Plus. So I click on upgrade, and that is, as of the date of this video, $50 a month versus $35 a month. I'm going to click on submit, and I'm still on the 30-day trial, so it doesn't really matter that I'm doing this. It's not charging my credit card or anything like that, because I'm still doing this from a 30-day trial. So I'll click on done, and now we're going to see some new features. So the first new feature that we're gonna see, it's gonna be inventory. So when I click on the quick create button, we're not gonna see the purchase order. When I click on purchase order, it's gonna be a new transaction. Let me click on refresh because I just did the upgrade. So we probably have to refresh the screen. So we'll let QuickBooks kind of log out and log back in to recognize that we are on the Plus edition. Okay, see, yeah, now it's gonna work. So I'm gonna click on purchase order, and now I'm gonna see a new transaction. Let me, it tells you that it's turned off. So let me turn that on in the settings. And where are you? Purchase orders, perfect. So let's turn purchase orders on. Click on save. And also where it says bills and expenses, we want to click on where it says track expenses and items by client. That's actually a really powerful setting. We'll click on save on that. I think it's maybe under sales. Oh, there it is. Products and services. And then now we have inventory tracking on hand. That's new. So we'll click on save. So that's perfect. So let's close that. And now let's go into quick create, purchase order. Okay, that's a new screen. We haven't seen this before. Now the purchase order is for us to enter purchases of inventory that we plan to purchase in the future, that when we get them, we'll turn that into a bill. So we'll do an example of that, but let me first create some inventory items. So let me click on the quick create, not on the quick create, on the settings button, click on products and services, and let's create some inventory parts. So once I click on new, now I have inventory as an option. Click on inventory, and let's say we're gonna put here Dell server model T1, and we'll put a model number, SKU number here, whatever it happens to be, the technical number. I'm not gonna put any initial inventory because we just turned on inventory for the first time. Let's say we sell this server for $3,500. The income account is now gonna be computer sales because that's one of our hardwares. And let's say we pay for this $2,700, and we'll put here cost of computer sold. So now I'm creating an inventory part, something that I'm gonna buy for $2,700 and then eventually sell for $3,500. And I usually stay away from this initial quantity on hand because that's creating new inventory, opening balance of inventory. So unless I'm doing opening balances, I want to ignore that completely. Now reorder point I like, that's how many I like to have at all times in stock. So I'm going to put there 5. So it tells me more or less that that's what I want. I want to have 5 at the most part. So I'm going to click on save and close, and I'll put 0 as of today. You always have to put, let's say, what's today's date? 01/05/2018. You always have to start with 0 and then hit save and close. So there's my inventory part, my server. Now I have 0 on hand and my reorder point is 5. That pretty much means that I should have 5 at all times. So let's do a purchase order. Quick create button and then click on purchase order. And then let's go to Dell Corp. And then under product and service, notice that I have accounts where I can pick like something from my chart of accounts, and I have my items. And I always, because I'm doing inventory, I always want to do items. So we'll click on the drop down menu, select the only product that's, that should be on a purchase order, which is my inventory parts. And then let's say I'm going to buy 5 of these. Okay, 13,500. And then I click on save and close. So a purchase order is not an actual liability. It's not a accounts payable. It's not debt. It's not a transaction. It's just letting me know that I expect to sell these in the future. I expect to receive them at some point. I don't owe any money to my vendor yet until I actually receive them. This is why when the product comes in, we're going to click on the quick create button, and then we're going to click on bill. And with the bill, we're going to be able to now receive them. So when I click on my drop down menu and select Dell Corp, I'm going to have a drawer here on the right hand side, letting me know that, hey, maybe this bill contains items from this purchase order. And then I will click on add, and that will bring all the information in there. Now, earlier in the settings, we talked about QuickBooks automatically remember the last transaction. And this is a part of confusion to a lot of folks. QuickBooks automatically did the same thing we did last time where we created a bill from that vendor. So we're going to have to delete those two lines because QuickBooks entered that automatically. And this bill is specifically only for this purchase order. Let's also add our shipping expense. Well, that's not here. Let's add it up here under shipping cost. And let's say we paid $100 for that. And then we'll put the bill number from Microsoft, our vendor, and then we click Save and Close. Now that we've done a bill, now we owe the vendor some money. Now we have an actual accounts payable. If I go into my expenses and then vendors tab, I'm going to see that Microsoft has a balance. Dell has a balance of $13,600. If I click on Dell Corp, I'm going to see all the transactions associated with Dell Corp, including this purchase order and the bill that I have created. Now, the only one I can make payments against is the bill itself, and then the payment process is exactly the same. The payment process is exactly the same. I can just click on Make Payment here, and it will take me to the Pay Bill screen, which is the same thing as me clicking on the Quick Create button, clicking on Pay Bills, and selecting the bank account and the vendor I want to pay from. The difference is that this Pay Bill section allows me to pay multiple bills at once, but in contrast, if I go into my expenses, vendors, and click on the actual vendor and see the bill and I click on Make Payment, it's the same screen, but it's slightly different because it's just to pay that one bill. So there's actually two ways to pay that bill. One is you find the bill and pay it directly from there, or two, you click on the Pay Bills window that allows you to pay multiple bills at once. And the process of paying a bill that's inventory from a purchase order is the exact same way as paying any other bill. Now, how this changes our accounting is the following. When I go to the Reports menu and I click on Profit and Loss, and I click on this year and click Run Report, here under Cost of Goods Sold section, I'm not going to see that $13,000 purchase because that was inventory that is sitting in my balance sheet. So when I click on the Reports and then I click on Balance Sheet Run, I'm actually going to now see an inventory asset of $13,500. And that's not going to move away from my balance sheet until I actually sell the product, because that's how inventory works. Now, what I'm going to do is I'm going to leave this balance sheet up, and then I'm going to right click up here on the tab in my Chrome. I'm going to right click on that and click on Duplicate. And this goes back at the very beginning when I said you should use Chrome. It's because of this feature. So I'm going to click on Duplicate, and I have two tabs. I have one tab in which I'm going to have my balance sheet. I'm going to click on Zoom so it looks a little bit closer. And then on the next tab, I'm going to do a Profit and Loss report. So I'm going to click on Reports and then click on Profit and Loss. And we'll have that up there. So now we have my Profit and Loss in one tab. I have my balance sheet in another tab. Perfect. Let me right click up here and click on Duplicate. And then I'm going to go into Create an Invoice. And how this is going to be different now, what I'm going to show you is, let me close that. What I'm going to show you is the effects of inventory when I create an invoice. So right now I have in my balance sheet as of the 6th, which is today's date that I'm recording this, I have $13,000 in inventory. And then on my income statement or in my profit and loss, I don't have any large sales in here. I have the sales that I had before, but I don't have the sales of that inventory yet. So I'm going to come in invoice and I'm going to create a transaction on the 6th. And let's say I'm going to sell 3 of those servers to XYZ Health Corp. So I select that customer. I'm going to select the product down here, select the server. I'm going to sell them 3 of them. And this is a $10,000 sale. And I'm going to click on, well, actually, before I do that, real quick, back in the income statement, I don't have any sales between January 1st and the 6th. Notice I have 0 sales. I have some cost, but no sales, right? So I'm running at a big negative here. And if I go in my balance sheet, I have $13,500 in inventory. So I'm going to go back into my invoice, and then I'm going to click on Save and Close. So I made the sale. So now that I go back into my profit and loss report, notice that my sales are 10,500. When I go into my balance sheet, notice that, let me hit run report and refresh that. Notice that my inventory is down now to 5,400. And that's how inventory works. When you buy it, it goes in the balance sheet and it waits for you to sell it. And once you sell it, you're going to see it in your profit and loss report as both a sale and a cost. Okay, and then now I'm not as bad and negative as I was before after that sale. So that's why I wanted to show you on the inventory part. And inventory is a very important piece of accounting if your company manages inventory. And that's one of the major features that QuickBooks Online Plus has that more expensive edition has. Now let's talk about budgets real quick. I'm going to click on the gear menu on the top right, and I'm going to click on budgeting. As I mentioned before, this is only on that Plus edition. So inventory and budgeting, those two main features are on the Plus edition. I'm going to click on add budget, and we're going to create a budget for 2018. Let's call this one 2018 budget, and we'll do interval, let's say monthly. That's good. Pre-filled data. Now let's do no there and no subdivision. Okay, so let's say that our budget for January, okay, that's good. Let's click on next. So our budget for January on computer sales was, let's say, 15,000. On part sales was 2,000. On shipping it was 100. On training it was, let's say, 2,500. And nothing else on the income side. Let's take a look at the cost side. So let's say on the computer sold, our budget was 10,000. This is an expense side. On parts, let's say it was 500. On shipping, it was 50. And on subcontracted trainers, let's say it was 1,250. Perfect. Let's scroll down. Let's say for advertising or marketing, our budget was 1,000. For bank fees was 100. For insurance was 500. For let's do this faster and let's go down to utilities was 300. Okay, that's not a full budget, but I just want to kind of show you, illustrate you what's going on. So I click on save here, and I'll close that, and then I'm gonna go into reports and do budget versus actual. And this is actually pretty neat. It's one of the most essential things of managing a business. Let me do it just for this month. So we'll just select January only. That way we can kind of see what's going on in January. And we click on run report. Perfect. So now we see that our budget for sales was 11,000 in this category. Sorry, it was 15,000 and we did 11,000. So we are, 79% from hitting budget. We are $3,000 in this case over budget. Like we haven't sold enough. So we're negative over budget in this case. So this tells me exactly what's going on in terms of what my target was versus where I'm actually are. And obviously I'm halfway through the month. So hopefully by the end of the month, I hit that target. And you can actually set a target or a budget for every income, every expense category, and compare them on the screen. Extremely powerful report, extremely powerful practice to do budgeting for your business. Now let's do a couple of more expenses, and let's talk about matching expenses with customers or projects or job costing. So let's say, for example, I paid with an expense, I pay with a credit card some parts for a project. So let's say I went to Amazon and I bought some parts for a project. So I went to Amazon, and then on the account type, let's say I used, this was some job supplies. And then down here where it says client, this is one of those other major features that QuickBooks Online Plus has, that third level, that third edition. I'm going to say that, I spent $150 on job supplies specifically for XYZ Health Corp. And I'll show you why this is important. I'm going to hit save and close, and then I'm going to run a profit and loss by client. So I'm going to click on reports. I'm going to click on, let's see, profit and loss by client. There it is. I can search it in there. And notice that I have my sales for Health Corp, I have my cost of goods sold, and I also have my job supplies. So if you want to do budgets, if you want to manage inventory, if you want to manage or see reports of expenses by customer or job, then you definitely want to take a look at that third version of QuickBooks, that Plus edition. But if you don't need any of those three, I think the essentials will work great for you. I'm going to click back in dashboard, and I think that was enough. I wanted to make kind of a comprehensive, complete walkthrough. I know I left out payroll. Okay, I would definitely tell you watch a different video for that. I left out sales tax. Definitely watch a different video for that. And I left out online banking. Those three are sort of their own mini world, and you want to watch a completely different video for that. But this entire video you saw should be pretty complete and get you up and running. Now, the last piece is get your accountant involved. Very important. If you have an accountant, if you're a business owner and you have an accounting professional that you work hand in hand, get your accountant involved. If you click on the My Accountant tab on the left side of the screen, it will actually recommend you to either search for an accountant. So you can click here where it says Find a Pro for Help, and you can put your zip code, whatever it happens to be. Let's say your zip code is 33331. That's where I am, and you're gonna see a list of all certified QuickBooks Pro advisors. Some of us are CPAs, some are not. You're gonna see a whole bunch of people, and you wanna contact that accountant. Call them, email them, see if they're the right fit for your business. And then once you have an accountant that uses QuickBooks Online, let me click back in My Accountant here, and I'm gonna add them into their account. So we're gonna do hector@qbkaccounting.com, and I'm gonna go ahead and invite my accountant that way. So if you actually put your accountant's email, the same email your accountant uses for QuickBooks Online, and you click on invite, your accountant will now get an email invitation, and then once they accept it, they can actually see everything you're seeing. So if they support you with QuickBooks, they can see if you're doing it right, doing it wrong. Hopefully your accountant does training as well. Again, if you don't have an accountant or someone to help you with your QuickBooks, that's what I'm here for. This is why I sat here and made such a long video for you to gain trust on someone to hire to help you alongside with this. And this video is also being posted in my course page. So if you're watching this because you bought a course, I'm not trying to sell you my accounting services. I'm just saying, if you're a small business owner, you want to have an accountant by your side, one that knows QuickBooks, one that loves QuickBooks Online as much as I do, to help you be successful. So I hope this long video was good. If you watched the whole thing, I certainly appreciate it. And then check out the channel for other videos similar to this. Thank you.